Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Saturday, March 25th, 2023. I'm recording this a little bit late. We had an emergency in the family, but everything seems to be working out okay. Please don't forget to hit the like button, subscribe to this channel, and share this video with others. Literally, this is what keeps this channel going. So again, don't forget to hit the like button. It is important. Um, the week for stocks was quite volatile, but I think it ended on a high note, especially for Nasdaq. However, small caps are still at a critical level, and I mean, they everything could collapse, but small caps specifically. A dollar bounce could pressure gold short term, but I think long term gold is in an uptrend. And we will look at oil as it approaches and touches 2021 levels, which are super important. Could it collapse to like $11? If you are not yet a subscriber, consider signing up at MasterChartsTrading.com. Not only you'll get my indicators, which I will explain in a second, you will also get the newsletter where we cover all of these various stocks. For example, in this members-only video, we will cover natural gas, silver, Bitcoin, Ethereum, lots of various ETFs, lots of various stocks. For example, Apple, Cisco, Travelers, ExxonMobil, as well as various gold related like Hecla Mining and Eldorado Gold. So stay tuned. Right, let's get to it. We're looking at S&P 500 on TradingView.com interface. This interface is called TradingView.com. It's free. You go to TradingView.com, open a free account, and you can have the same interface. However, you will not have these lines on the chart. See how it looks without the lines? It doesn't look good. It needs to look better with my lines. And you can get them by following the link in the description. Why do I use my lines on this chart? These are called trading indicators. Um, they are helpful to visualize price action, and most importantly, they're helpful in figuring out whether or not we want to be even buying or selling. Um, so on this chart of S&P 500, I use this symbol ES1 exclamation point. It's called continuous futures. So looking at this chart, it's a candlestick chart. So each of these funny looking green or red candlesticks are a day's worth of activity. Therefore, this is a daily chart, 1 day. Okay. I constantly get these questions. So that's why I constantly keep explaining the same thing. People do not understand what daily means. Right now we're looking at weekly chart because each candlestick is a week's worth of activity. You see what I'm trying to say here? So if you're using my indicators, you need to change the settings for the weekly to 52. If you're using them on daily chart, you need to keep them at 250. Okay. So looking at this chart for S&P 500, I already explained it several times, but generally speaking, right there where I'm hovering on Thursday, the 2nd of February, we had at least an attempt to break into a new bull market or uptrend. On this chart, you can clearly see that we did not close above this blue line on Thursday, the 2nd of February. However, if we add dividends into this equation with looking at S&P 500 ETF SPY, then we indeed have closed on 2nd of February above this blue support resistance line, meaning that we have entered a new uptrend, a new bull market for stocks. Okay, so once again, this is a dilemma I am still struggling with, is that what should I trust? Should I trust the S&P 500 ETF or should I trust the underlying index without the dividends? All right. Make a comment. What do you guys think? Who do you trust more? Which one do you trust more? I decided to make an exception or whatever you can call it and trust the ETF. So from here on, from 2nd of February 2023, so about, month and a half ago, I said that we're now in an uptrend. S&P 500 or stocks are now in an uptrend. We're going to treat it with the same way, that we're going to think that stocks are in an uptrend, therefore we will no longer be selling them short like we did here before. Let me show you where we were selling them short, right there on 26th of August 2022, and then another alert was sent on 13th of September 2022 with great results because we had moved to new lows. We bottomed out with a hammer candlestick right there on October 13th, and then we had a green giant right there, a green giant candlestick on Thursday, the 10th of November. All right. So here I was already suspecting something was off and most likely we will continue higher. At that point, I was still thinking that we're in a downtrend. So to me, that would be off. Okay. And lo and behold, we did indeed continue higher. In fact, we're now saying that we're in a new bull trend, new uptrend. Okay. Now, over the past few weeks to about a month, we've been trading down away from this level, from blue line at 4207 for S&P 500. In fact, we actually closed below this red line right there where I'm hovering on the 9th of uh, Thursday, the 9th of this year, 2023, meaning that we're currently in a caution phase. If we are in an uptrend, but we pulled back, and we pulled back below this red line, we're in a caution phase. All right. So, do we sell short or do we do nothing? Normally, if we were in a downtrend and we didn't have this dilemma I just described, where we have dividends helping S&P 500 into an uptrend, I would say, yeah, sell it short right now. Okay. But because of the dilemma, and because I think we're now in an uptrend, we're not going to sell it short here. Okay, so this, you can see those downward facing arrows. They're kind of purple in color. That means we did not send any alerts out. Whereas down up here in September of last year, they're red, meaning that we did short here. Yes, some subscribers actually made great money here. I had several people say that to me from the subscription. Now, what's going on today? So very volatile. Let's look at weekly chart. Weekly chart means that we're going to encapsulate 5 days worth of activity, or more than 5 days, because the market starts trading on a Sunday. And there it is. So there's that candle from this week right there where I'm hovering. And turn this off for a second. This is the week from. This is this week's candlestick. So notice we have a big shadow at the bottom, big shadow at the top, green body, meaning that we started lower and we closed higher. However, if you just look at this candle, it's super indecisive. Did the bulls win? Did the bears win? Nobody really won. We just kind of went up and down and sort of stayed in the middle. So it's called a spinning top. It's more or less nothing happened. So a type of this candle is called a spinning top candle. Nothing really happened. We traded around about the same area. However, the amplitude was quite high, large movements. Okay. So the ending for this week was actually not bad. So if we look on this is a daily chart now. Looking at this candlestick right there from Friday, from yesterday, from March 22nd, 24th, I'm sorry. This is a hammer candlestick. Okay, a hammer candlestick is good. Let me show you that a beautiful hammer candlestick which started this whole uptrend. And there it is, where I'm hovering. It was on 13th of October 2022. Hammer candlesticks indicate a bottom of some sort. Is this a bottom of some sort? I certainly hope so. So, even though more or less we're sort of indecisive, when we get to Nasdaq, I'm going to show you that actually there is good. It doesn't look too bad. So let's get to Nasdaq right now. I'm gonna skip Dow Jones because really nothing other than different happened to Dow Jones. I'm gonna skip that. But let's look at Nasdaq. So on Nasdaq here, what I'm showing is this. Okay, I'm gonna turn off the indicators for a second so you can just look at the price action. So notice this high from Thursday, the 2nd of February. Okay, I'm gonna put a line at the top, right? And I'm gonna extend this line to today's prices. Okay, so this line indicates previous resistance, and notice that what exactly was happening. We had one on 22nd of March, on 23rd of March. We had two-time attempt to get above that level, so far unsuccessful. Okay, however, notice we also closed at a new high. All right, so Friday's close right there where I'm hovering is a new high for the move. Okay, so this is a new low for the move here, but now we have a new closing high. Okay, closing high. Notice that term of phrase. Okay, let's look at weekly chart. It's more obvious here. So notice how this week's candlestick close is actually above the previous closes. So this is what I mean by closing high. So this is actually not bad. We also had a new high for the move right there for Nasdaq. It occurred on the 22nd of March. We didn't have yet a clean breakout above previous high on the 2nd of February. When we see a new close above 2nd of February, ideally on a weekly basis, okay, so we're looking at a close above um, the this level, 2nd of February. Okay, I think at that point we will see a strong move higher. Okay, first of all, towards this blue line, and when or if we close above this blue line, which is currently at 13,474. I'm reading it right off the chart, right there. If we close above that level, I think we will, basically move higher. See, I put a line here, significantly higher from here. So notice this move from the lows in December, a flat, more or less flat consolidation, and now we need to duplicate this previous move that happened on the, drawing a little arrow, so it's more obvious. So it's just like a normal sort of move, a move higher, flat consolidation, another move higher. Fingers crossed, because this would also indicate that um, basically we're out of the bear market. It's difficult to tie together world events to the stock market. However, my understanding and my feeling about it is that if we move higher for stocks, that means the war in Ukraine is coming to an end, and Western powers are going to be victorious, or at least not losing. Again, it's my opinion. If you have another opinion, please make a comment. However, Russell 2000 small caps index is under severe pressure, not surprisingly, because we had a several bank failures, or at least one. Silicon Valley Bank failed, and there was also a fallout in Switzerland with Credit Suisse being bought out by UBS. So yes, we had pretty nasty movements in the financial system. So notice what's happening to the Russell 2000. We're now at the bottom of the range, attempting to stop this falling. Notice where we're attempting it. We're attempting it exactly at the yellow line. Okay, so we had one on March 13th, two on March 20th, three on March 23rd, and another on March 24th attempt to pierce this yellow line. So far, we have failed. Right. This is a good sign. Also, on Friday this is also a hammer candlestick. So fingers crossed. Once again, we're gonna bottom out and move higher. Overall, Russell 2000 is still in an uptrend, but since we closed below this red line, we're in a caution phase. However, if we get below the yellow line and close there, we might be in the avoid phase, which is not a good news for stocks. Moving quickly to high yield bonds, junk debt, JNK, junk debt, and stocks in have a high degree of correlation on weekly time frame. Notice here JNK on weekly time frame. Notice this yellow uh, bar here at the bottom here. It shows the correlation to the S&P 500. Unfortunately, lately it's been dropping. Normally it's pretty high, but currently the correlations is actually about 50%. So sometimes stocks doing the same thing as junk debt, and sometimes they don't. Ideally, they should be doing the same thing because well, correlation doesn't mean causation, but it's a good thing when both are moving higher. Right now, they're not really doing it. I think junk debt is sort of trading sideways, whereas S&P is actually going down. So we'll see where this leads us, but overall, it's not a end of the world chart yet. And junk debt, yes, is in a new uptrend. Notice this breakout here on 1st and 2nd of February. So I'm considering high yield bonds to be in an uptrend now. Switching gears to the dollar index DXY. Notice on this chart on Monday, the 30th of January, right there where I'm hovering, I put in this line with the circles. I'm clicking on it right now. And I said that at that point, I didn't know what the chart would look like, obviously, but it looked like that. So I only had this much information at that point. I did have projection of my indicators into the future, and the price action basically followed that line. So right this instant, I think, and then notice that we had two short signals right there on Monday the 13th, and again right there on the Thursday the 16th of March. So yes, already you had money, you were able to make money here if you're able to trade the security, but you can also do euro versus US dollar. It's pretty similar chart. Now we're attempting to bottom here at the yellow line. Notice on 22nd of March, 23rd of March, two times we touched this yellow line. Most likely we will bounce. We can project the indicators into the future. Again, notice the red line is projected to be slightly higher from here. So it's not out of the question for dollar to bounce. Okay, dollar bounce most likely will lead to gold moving lower. So gold has been on fire. I said it several times already. Um, we had a breakout right there on 13th of January where I'm hovering. Gold pretty much did what I expected, moved slightly higher and then moved lower. So that was my expectation. Notice this line with the circles. It's just it did it a little bit faster. And I said that it's going to rally. It did rally. Gold is now approaching new all-time highs. So if dollar strengthens, gold will most likely pull back. Why? Because XAU divided by USD. So if the bottom part of this equation gets bigger, gold will pull back. This currency pair will pull back. Looking at the weekly chart for gold, I have drawn in this in the past. So I'm going to zoom out. So weekly again means each candlestick is a week's worth of activity. So this chart is going back to 2018. Okay, so notice this formation, giant formation that I marked with this double dip thingy. Looks kind of like inverted cup and handle. This is exactly what's it called. It's an inverted cup and handle with the depth of this pattern being around 20%. What I'm saying is if we close above previous highs that were made in August of 2020, most likely we will see a move equivalent at least to the depth of this pattern. And that's why I'm predicting that gold will hit 2500 within the next year, I would say. So long-term gold is bullish. Short-term, very likely a pullback towards like 1860. So very, very likely. Unless dollar just collapses. But this is a very likely scenario in the near term. We are long gold. We're long many gold miners as well. I'm personally long one of the gold miners. Okay, unfortunately, I won't be able to cover oil. Doesn't look like I have enough time. However, if you sign up, go to MasterChartsTrading.com, sign up for one of my products, especially for the newsletter. And the newsletter will contain all of the stocks that I just mentioned. All of the stocks will be covered in the newsletter. in the video newsletter. If you're not yet a subscriber, subscribe. Don't forget to hit the like button. It's very important. Thank you for watching, and have another great trading week. Bye bye.